start. We are waiting for one more board member, so we have quorum. So we are going to have, we're going to kind of go on to a little bit. So as we do with all the meetings, if there is anybody from the public, when we get to that public comment period, if you'd like to come off mute or raise your hand in the chat, or if you are in the room, we will acknowledge you and give you a few minutes to discuss any topic that's on there. So now I'm going to turn it over to Connor, who's going to go over housekeeping issues.
Thank you, Mr. Sunderland. Good morning, everyone. This is Connor Benny with GHD. I'd like to wish a warm welcome to everybody joining us for today's December board meeting. As a reminder, this meeting will be recorded. To start things off, I'd like to introduce a couple of housekeeping measures to reduce the amount of background noise. We kindly ask you to stay muted until you're ready to speak. And at the time you're ready to speak, please state your name and affiliation for the record. At this time, I'll begin taking the roll call, starting with the board members. After I say your name, please say here or present. I'd like to start with Bill Sunderland.
Present.
Scott Billman.
I'm remotely present.
Cool. Bill Hanley.
Present.
And Tim Donovan.
Present.
Thank you, board. I'll now move on to our regular attendees, starting with Peter Merlot.
Present.
Jack McMahon.
Present.
Charlie Martirana.
Present.
Damon Sykes.
Present.
David Hill.
Present.
Doug Foltz.
Present.
Kelly Lee.
Present.
Bill Ferguson.
Present.
Stephen Waldvogel.
Present.
Justin Steiner.
Present.
Matthew Adam.
Present.
Zach Cox.
Present.
Damon Rand.
Present.
Pat Thornton.
Present.
Mike Wolas.
Present.
Nolan Skipper.
Present.
And Sean McLaughlin.
Present.
Now I'll move on to anyone who I didn't call, and I think we have everybody, so I'll pass it back to Mr. Sunderland for the rest of the meeting today.
All right, thanks, Connor. All right, board, so a couple of things, we're gonna go out of order here. There are things that we're not gonna be able to vote on yet because we do not have quorum. So if you would, look at the agenda, and if there's any additions, subtractions, edits that you would like to make to that. I know yesterday we had some additions that Connor has been kind enough to update on there. So if you take a look at that, and then, like I said, once we have quorum, we'll come back to this and vote to approve it. Hearing nothing? Okay, like as I said, we'll come back and you'll have a motion and approve it. If you look at item number 2, which is the draft minutes from the meeting of November 12th, 2025, if you would look at those draft meeting minutes and see if there's any edits that need to be, or corrections that need to be made to that. Any corrections, edits? Anybody on the board? As I said, we'll come back to this and we'll take a motion and vote for that. All right, item number 3, public comment period. So if there is anybody from the public that is either virtual or in person, if you would like to speak on any topic, please raise your hand in the chat or come off mute. Or if you're in the room with us, acknowledge yourself and we will give you a few minutes.
Chairman, just Pete Merlo, Principal Engineer, to point your note, Phil Jackson joined the call. I believe that's on Council Charlie.
All right, thank you, Peter.
All right, next item we're gonna go down to is the rate consultant. Charlie, do you wanna,
Okay, you want to go there? Fine.
Yeah. we're not gonna vote on it, so.
All right, good morning. So the discussion is that Lisa Fode, who has been the rate consultant for many years, has retired. And she's indicated she is not available further to assist with this bond financing that is projected for January or February. And the key is that a rate consultant is necessary as part of the certification process for and disclosure process for the bond financing. The controller of the city has identified Drescher Malecki, which is the regular auditor for the city, as well as the Buffalo Water Board, as a potential candidate, and Bill Ferguson's on, so he might be able to speak more to that discussion. But significantly, there is a potential conflict issue because of their auditor role. So the upshot is that the board would be in need of engaging a rate consultant in the short term so that the bond financing can go forward. Bill Jackson, who's on the line, our bond counsel, his firm at Hawkins Delafield, have presented a guidance with regard to the duties of the rate consultant, as well as identified potential for Drescher Malecki as a stand-in rate consultant for now. So I think the question for the board is whether we pursue a discussion with Drescher Malecki as an interim candidate, and secondly, more for the permanent or long-term, that the board consider the process to engage a new rate consultant, which typically involves a request for qualifications and a request for proposals. Now, we know that would take some time and may not be enough time in order to fit in with the bond financing. In addition, there are duties that occur during the year for the rate consultant to assist the water board, notably reports and certificates that have to be done with regard to your financing, with regard to your rate structure. One of them comes up as soon as February 1. And then throughout the year, particularly as you evaluate your revenues and expenses and whether new adjustments have to be made to the rate structure, like you just did, effective October 1. So I think 2 points of reference here. One, the board needs to consider what to do about a temporary or interim rate consultant. And then 2, to begin the process to engage a new or permanent rate consultant going forward. Bill, if you're on, would you like to add anything?
Thank you, Charlie. I think you covered it. One of the things that we would point out, and I think it's laid out in our memo, is as part of the bond financing, there's a couple of tasks that the rate consultant undertakes. The first of which is putting together a report. The report will outline, certain analysis that the rate consultant has done in connection with the financing. Just to give a little bit of background for the board, when you issue bonds, you issue revenue bonds. And as the name suggests, it's the revenues collected by the operations of the water system that are used to pay the O&M for the system, but then, from a bondholder perspective, the debt service. And the rate consultant is critical in that type of analysis to ensure that the rates are appropriately set so that there's sufficient revenues that are generated by the system to meet those obligations. I think in addition, there are certain covenants that the authority has with bondholders that are set forth in the governing resolution that governs all of the debt issuance by the authority. And there are certain certificates that must be given by the rate consultant at closing that are relied upon by investors and others as part of the transaction. So I think the first and foremost question would be if the board would like to move forward with a discussion with Drescher is if they are able to produce the report that is customarily prepared by the rate consultant for inclusion in the offering document for the bonds that is circulated to investors, and then secondly, that they are able to provide the certifications in the form of the certificates that have been given in connection with prior financings, and again, that are required under the resolution. I think that's kind of the threshold question, and if the answer is yes, then the board can entertain moving forward with Drescher. If not, I think we need to have a kind of an alternative plan, and that would be to bring on in an interim basis a rate consultant for this financing, and then maybe a full procurement process following the closing of the bonds for the long term.
So I think obviously the board is not in a position to make a resolution or a decision today, but we could get at least your sentiments or intentions, so to speak, if you want us to proceed with talking with Drescher Malecki further and seeing how they would react to producing the report that we're talking about for the upcoming bond issuance. Stephen, do you have any thoughts or comments?
Yeah, so Drescher has given, I haven't reviewed it, but I think they've given a proposed approach. And I guess I might, with all respect, I might look to bond counsel to provide guidance to the board whether or not that's acceptable, for this bond sale. If the board chooses to move forward on an interim basis to secure a rate consultant for the purposes of the bond, I certainly can weigh in on that and provide guidance and even some potential companies that can do that, and I can help the board shepherd that through very quickly. Most definitely in the longer term, we need a proper procurement process for a proper rate consultant, right? So that I think you will do sometime. But we have a very important bond sale that's begun. The preparation has begun. And if you all need to, or you choose to secure a rate consultant for the purposes of that bond sale, I think you have two choices. Can you move forward with Drescher and Malecki to serve in that role? If not, then how do we do that? And I can weigh in on that. I have some opinions on that process. So I would very respectfully ask bond counsel, is Drescher and Malecki, is it permitted for them to serve in that role, or are they conflicted?
Well, I think on the conflicts question, they have provided so our analysis to this point has been to review the resolution, to review the various operating agreements, financing agreements, et cetera, to determine the role of the rate consultant. And we've outlined that with Charlie's assistance in a memo, and we've also included the rate consultant's report. We have reviewed the agreed upon procedures letter or outline that was permitted by Drescher. But I think it's important to have Drescher be able to tell us, can they meet the obligations of the statute? We laid out 5 or 6 bullet points, and I think more importantly, can they produce a report with a narrative in a very similar fashion to the ones that have been produced for all of the authorities' prior bond offerings, and provide the certifications? I think if the answer to that question is yes, I think we can move forward. I have some doubts as to whether or not they will be able to provide those, the report and the narrative that is expected by bond investors. I think as accountants, they would be able to look at and test numbers. However, I don't know if they would be willing to offer conclusory statements and opinions in the fashion that I think bond investors are accustomed to. So the rate consultant's role, in my view, isn't simply to say, yeah, the numbers work or these projections are mathematically correct. I think there is kind of a different level of analysis that Lisa has brought to the table, and that most of the rate consultants we have worked with in the past have also brought to the table. And not to say that it's a knock against Drescher. I just think the role of a rate consultant is very specialized. Also, I think for the board's consideration, you are proposing to issue $80 million in bonds on a new money basis, and you're also looking to refinance a debt. It's a sizable debt offering, much larger than some of the more recent bond offerings by the authority. And I do think you want this deal to look as closely to a normal transaction as possible. We have raised the question with the underwriting team that has been hired by the authority to underwrite the bonds, to make sure that even though it may be legally sufficient to have Drescher serve as the rate consultant pursuant to certain agreed upon procedures, will that type of approach be accepted in the market? Will the rating agencies, who are accustomed to seeing the rate consultants' reports, et cetera, in the document, accept kind of an alternative approach? So I think there are a few questions that need to be addressed. I think first and foremost is the conversation with Drescher, and then we do want to make sure that we have the feedback from the underwriting team to make sure that there are no impediments in their view.
I'm
Thank
Bill
you.
Ferguson. Yeah, Steve, can I hop in for a second? I've had several conversations with Luke Malecki, and having been on his side of the desk for about 14 years in my past life, and with the change in independence rules, 20 years ago, they probably could have opined on a typical rate consultant letter. When Lisa Foti was with Ernst & Young, that's where I met her. She was the rate consultant with E&Y, even though they're doing the audit. Right now, the rules have changed quite a bit, and they cannot really, an independent CPA firm cannot opine or cannot recommend any operational or management decisions. They can only say the numbers work out the way they do. The math is correct. Luke was pretty clear in that they can't risk impairing their independence to do the audit by actually offering advice to the water board about whether or not the rates need to be raised. They said they could take the numbers prepared by others and just say that the math works and the rates as proposed would meet the minimum covenants, just in a very brief nutshell. But that might be a conversation for Luke to have with everybody. But where I'm sitting, I'm not sure this is going to work.
So based on that feedback, thank you, both of you. My opinion then is, you should put the questions back to Drescher and Malecki, as bond counsel has suggested, but we also in parallel begin a process to retain a rate consultant as quickly as possible. It sounds like that is going to be the necessary. In the current circumstance, because the timing is so critical, I would suggest we do a very abbreviated qualifications-based selection on a very narrow scope just for issuance of these bonds, and not the broader, more comprehensive role as rate consultant, which I think you might want to take more time and be more robust in your selection. As I understand it, this is a professional service, so you can select based on quals. And if that's acceptable, or, we can structure that, of course, with Charlie and procurement people, I could start to put some words together around that on your behalf, and You know, I'm familiar with some of the top rate consultants across the nation. I think it's a big ask to come in and within 2 months give an opinion on $120 million of financing and refinancing. But it seems like that's what you may have to do. So I would say we should start the process very soon. And if you're okay with a qualifications-based selection on a very narrow scope, that I think would possibly allow you to have a proposal in January from a rate consultant. You know, I know it's the holidays, but if we can box it in and get a qualifications proposal, you know, that you might be able to make an award in January. Whether or not this will delay the bonds is to be seen, to be honest.
Tim, Bill, thoughts?
I agree with Stephen.
I'm okay with that too, Stephen. Just abbreviated, at least for the interim.
I want to make sure, Charlie, you know, I'm not overstepping or outside any bounds here, though.
No, thank you, Stephen. You laid it out quite properly. I think you've got this choice here. And certainly from a legal standpoint, the board can hire whoever they want, whenever they want, because it is a professional services type of thing. In an ideal world, and yes, there are requirements that you go through an RFQ, RFP type of process that we would encourage you to do going forward on a more permanent basis. But the circumstances are what they are, and you need to reach out and find somebody, pretty much as Stephen Waldvogel has laid out.
Agree.
Okay, so the only other question is, do we even bother to pose the questions back to Drescher at this time? Do we keep that avenue open, or do we just close that?
I submit that it may be helpful to do that, only because Drescher Malecki is very familiar with the finances, so they don't need to, relearn what they already know, so to speak. However, Bill Jackson said it properly, that there is a concern about what product they would deliver in the end, and that's ultimately our goal.
So I might suggest, GHD can help work with Peter to put something together quickly for a rate consultant. And then
Done that
we'll
before, we'll do it again.
maybe we'll let Bill and Charlie move forward with the questions to Drescher.
It's fine.
Okay, thank you.
Thanks.
And Bill Ferguson too,
Yeah,
2 bills.
2 bills, yeah.
Bill and Bill, is that all right?
I'm happy to assist.
Okay,
Thanks, Bill.
thank you.
All right, let's move on to item number 6, the draft financials. Bill Ferguson.
Hi, Bill Ferguson, City Accountant. Connor, if I could just take control, it'd be easier for me to scroll through as I present.
Okay, go ahead.
Now I'm just seeing how I can do that right now. The button just disappeared. Well, if you just scroll through, it might be easier. If you just scroll through, I'll just tell you when to stop.
Okay, yeah, that works.
Yeah. Yeah, this is just the index. If you maybe stop on page 1, which is the independent auditors report. Right here. This is the only thing that Drescher Malecki is responsible for is their report. The water board is responsible for the rest of the statements. And if you see there under the opinions, that's the most important part. The second paragraph, it is a clean, unqualified opinion, which means that the statements presented are materially correct. And the rest of it all is just standard boilerplate language about the report. If we go on to page 3, which is the management's discussion and analysis, the MD&A, this gives you pretty much your overall highlights about the statements, and probably a good way just to take an overall look at what's in the rest of the document. It explains what the statements are. I probably don't need to go through. But if we go to the table 1, which is on the bottom of page 4 on the next page, under the financial analysis, that just gives you right here. That just gives you the brief snapshot of where we are. Some of the major highlights, you see there was a drop in cash of around $9.6 million. Part of that is also, we know that we are spending money, but if you look at the liabilities, the current liabilities are down $5.5 million in total, and most of that is accounts payable. So some of that was just timing. Last year in 2024, we had more cash, but more accounts payable. At the end of 2025, we have less cash, but less in accounts payable. The receivables have gone up by around $2.7 million. We'll talk about that in the statements. That's a little bit significant. For the total non-current assets, increased by a total of $7,970,000. That is the investment in the system itself. So I think that is a positive sign. We obviously want to be investing in our water system. Deferred outflows of resources, that relates to the just more of the, it's all accounting ease. It relates to the pension liability. And then we have the liabilities. We have the current liabilities, which is mostly accounts payable, and the non-current liabilities are the due to the water authority, which is the debt, and then also due to the water enterprise fund, which is a lot of the other accrued OPEB, accrued wages, etc. That's explained in the footnotes. But that has gone up just because the water authority did issue new bonds in fiscal 2025. If we scroll on to the next page, it's the statements of net position. I'm sorry, not the next page, page 6, the statements, revenues and expenses and changes in net position for 2025, right here. Because the previous page just showed last year's 2024 compared to 2023. We went through that last year. Operating revenues are up $3 million. There was a rate increase last year. Other significant ones are water meter repairs and other expenses are up around 5.8. We have depreciation, etc. And other significantly, the transfers in looks like it went down by $14 million. Most of that money back in 2024 was the ARPA money that came in from the city. That came into 2024. Obviously, that was a one-time project. That did not repeat in 2025. The transfers to the general fund is what was called forward in the financing agreement. That's an annual amount that goes up by 5% every year. And then you see the change in net position went down by $4.4 million. Note that depreciation, which is a non-cash charge, was $8.8 million. But once we look at the statements, you can see we're from statements of cash flow where cash went in and out. So that's not really a big concern. On page 6, on page 7 just shows the 2024 versus 2023 comparison. We won't go through that. And lastly, on page 8 is a summary of capital assets on table 5. That just shows your investment in the system from year to year amongst the different categories, showing a net increase of $5.5 million in buildings and improvement and $11 million in an increase in infrastructure. So that's the overall summary. Going on to the statements themselves, scrolling through on page 10, which is the statements of net position, the balance sheet in the for-profit world. That's just pretty much is what we looked at in summary, expanded out in a little bit more detail. Here we go. You'll see that we talked about the cash, accounts receivables. It went up from 5.9 to $8.5 million. But also notice that the overall receivables are, that includes an allowance of $35 million, almost $36 million at the end of 2025 compared to $31 million. We're sitting on, as we all know, we're sitting on an awful lot of uncollected accounts that have been just raising year after year. And the Water Board is well aware of that. Going down, we have the non-current assets, which is the capital that we talked about. The deferred outflows relates to the pension. And then we have the liabilities, the due to the water authority is the current portion of the bonds due for next year. And the due to division of water is the accrued comp, workers' comp, and the OPEB. That's all detailed out in footnote 8 on page 27, should anybody want to look at that. The next page is the operating statements of revenue, expenses, and changes in that position. As you see, the operating revenues, charges for services went up by a couple $1 million with the rate increase. We talked about the operating expenses going up with an additional amount for the water meter repairs and other operating expenses. Non-operating revenues are the interest expense. That's the major one. Other sources and uses, we talked about that, the lack of ARPA money and the transfer to the general fund, which shows our change of net position of a decrease of $4.1 million. And on the next page, we have the statement of cash flows, which takes everything from an accrual basis and just makes it into more of a cash basis statement. And the bottom part of that page, the reconciliation, pretty much shows you why cash has changed in a snapshot. The operating income on an accrual basis was $8.4 million. Add back the depreciation expense, which is non-cash. Look at your changes in receivables and payables. You see that receivables increased by $2.7 million, payables decreased by $6 million, and we have some of the deferred inflows decreasing. So that why we started off with $8.4 million of operating income, and cash provided by operations was $8.3 million. So it's pretty much even right there. So that are the statements in a snapshot. If you go scroll through the rest of the documents, statement 1 are the footnotes, just more what the water board is, the significant accounting policies. Those are all standard. Nothing has really changed there. On page 16 and page 2, we have looking at the cash and investments. These are all required disclosures. I'm talking about the cash of where it is. Part of it's FDIC insured, but with the amount of money we have, it's not really FDIC insured. It's all held by collateral. That's same as with the money the city holds. Next page is looking at the receivables looking at the late penalties and the interest as excess. Those are the accounting policies and the narrative that's on the top of the screen there. And these are just showing your gross receivables are $44 million at the end of 2025 with a $35.8 million allowance. I think that's a number that is we know about it, but it could be considered a concern. I think it may be time to actually look at it. How long do we hold on to these receivables versus abating them? Because some of these are quite old. Will we ever get them back? And I'll put in one other plug for it's whether or not does it make sense to take some of the very old ones and just attach them to the tax statements as a tax lien on the associated properties. Page 19, I will not go over in detail because that will put everybody to sleep. It's the required disclosures for the pension liability. The actuaries have fun with that, so there's a lot of numbers if you're really interested in looking at the changes in there. And the same thing on page 23 on footnote 6, the other post-employment benefits, the OPEB. Very similar disclosures there. And you're looking at on page 24 on the next page here, the net OPEB liability is $22 million. That really didn't change too much. It went from $21.3 million at the end of 24 to $22 million. It's a significant number, but that's also looking at amounts that will be paid out over the next 30 years. So it's a big number, but as with most entities, it's more of a pay-as-you-go. The city pays the pension benefits and the other, the health insurance, et cetera, to the retirees on a pay-as-you-go basis. But the overall liability that's applicable to the water board is $22 million. On page, the rest of the note continues, risk management, which is on the next page at the bottom, footnote 5, just noting that the city is self-insured for workers' compensation. And the liability that we recorded is about $619,000 for workers' comp, and that's what our estimate is over there. The next pages are the state of the debt that's being held by the Water Finance Authority and the liabilities to the Division of Water. That's the detail of the balances. That's, you see the top part, the top table is fiscal 2024 and the bottom table is fiscal 2025. You notice that we have almost $33 million of new bonds issued in fiscal 2025 and paid off around $6,880,000. The rest of the notes goes through talking about due to the water enterprise fund, what's going on there, and the payout schedule for the existing bonds at year end. So that's that table right there at the bottom that shows you the amounts due to the water enterprise fund. Those are pretty much the biggest amount there is the other post-employment benefits, along with other payables and workers' comp and things like that. And the rest of it just explains. Page 26 is a narrative regarding those amounts, and page 29 is just saying that there's no subsequent events through November 13th that would have any significant impact on the statements. And the last part of the statement is the required supplementary information, just more things relating to the pension disclosures. We talk about the OPEB liability, and there's other information section at the very last, which just talks about the water rate charges, what the charges are, the collections for over the past 5 years, at the very end of page 35. And then, yeah, just with the rates over the past 5 years. And then on the next page, we have what the billings and collections were with the flat and meter rate accounts. Second last page, on page 36, are the largest 10 users, top 10 accounts by usage. And lastly, the very last page is the schedule of water board investments. That is a required report for the Paris filings that I will be doing shortly when the statements are approved by the board. At that point, they could be issued in final form by Drescher and Malecki. So that's, and hopefully it was 5 minutes or less. That is the Buffalo Water Board fiscal 2025 statements.
All right, thanks, Bill. So obviously the board can't vote to accept these at this time. Probably going to have, because these are time sensitive also, so we're going to have to have a special meeting, Peter, to vote on these, so you can get these posted on Paris.
Bill, let's just
Yes.
ask, with regard to the Paris filing, is that due 12/31 or that you
Well,
need this?
technically it was due September 30th. I mean, in theory it's due September 30th, but the statements aren't ready. But December 31st is more the second. If it's not filed by December 31st, we get put on the naughty list as being late, as reported as being a late file.
For any kind of fee.
But historically, there's always been leeway between September 30th and December 31st.
Fine or a fee for that?
No,
you know
no, it's no monetary fine, but it's just a list that the budget office puts out for the public authorities which are late. And we've always tried to avoid that.
There are many others, and the Buffalo Water Board has been very good not to be on that list that the public looks at, journalists look at, and so forth.
And there's a 2 p.m. Buffalo Water Finance Authority meeting to approve their draft audit financials as well.
Right. So it's potential here. This is obviously December 10, that the board might be able to spend 5 minutes, so to speak, and just approve the draft financials so they can be posted between now and whenever.
So we have a special meeting for voting purposes only.
That would be I think, suggestion, yeah. So something to just consider maybe at the end. Bill Ferguson, I just wanted to ask, with regard to the accumulated uncollected accounts. Is there any
Mhm.
guidance from your office or the state controller, or even Gresham Malecki about, at some point to write off old debt somehow?
I'm not aware of any official policies, but I think it merits looking at, how old are these? And at which point do we write them off? I would think anything older than 5 years, collection is probably not likely, short of a, tax lien sale.
Okay,
And the
so,
other issue, but if the board does choose to put them on as a tax lien, that's one thing I need to think about is, do we write, can they go on there as a tax lien if the amounts have been written off and abated by the board? And I'm thinking probably not.
all right, so the two are really connected. We'd have to
Mhm.
evaluate. Thank
This,
you.
this has been obviously an ongoing issue. You are looking at the potential of purchasing and implementing a new customer billing system over the next couple of years. This should be resolved before then, otherwise you're just gonna move all that old debt. I can't speak for the chairman, but the chairman has asked me to engage Promise, one of your specialty vendors, to look at collecting some of that debt on your behalf and/or developing a rationale for write-off. Okay, so if they pursue that debt and indeed it's non-collectible, they, in theory, could provide you a report describing what it was, what efforts have been made, and, it's not collectible. That justification, I think, was requested some years ago from the controller's office when we initially thought about writing some of this off. What have you done to collect it? And to be, I guess, transparent, some of this is so old that nobody remembers, and many of these buildings are raised. They're not there anymore, but it does remain a lien on the property. That's the key here. So there has been some discussion about this, and I would recommend you continue to try to address that within the bounds of accounting and legality, Nothing to do today, but I know Brian is trying to move forward.
We'll look at a special meeting for the, approve the draft financials.
Yeah, do we want to discuss the date? We have 3 members here, or do we want to just pull them at a later date, or do we want to
Why don't
narrow
we
down a time?
just do a poll? Debbie's on vacation right now, so Scott is in the office, I think. So if we at least have Scott,
We got 4 of you. What, are there any, we can look at?
I have no conflicts right now through next week.
So I think we want to target next week. If we could.
You don't necessarily need everybody here.
Yeah, after that, it's Christmas, right? It's gonna have to be next week. Week after it's Christmas, you're not gonna get them.
I'm good next week. I'm wide open.
Boxing Day special.
Depending on the time of day.
Would it be helpful
How about
to
just
do
a
it very
week
early
now?
in the morning?
At Wednesday, 9 o'clock, same, that time, same, that place.
Good for me.
For me.
I have to look at my schedule. I got an arbitration on the 17th, so I'm
Scott?
not sure what time it's at.
Scott, are you still on?
I am. What day are we talking about?
And I just picked a week from Wednesday just to start with that discussion.
Let's
17.
see here.
But if we want to make sure we're all good right now, pick another day, that's fine too.
17th, 9 o'clock in person.
Where?
Eric, Colonel Ward.
Okay. 9 works for me.
Okay.
Right, yeah, so. And what you.
You can tentatively put me on there. I just gotta see if my.
Yeah, if there's an issue, we'll have to.
I would move the time if we have to.
Yeah. Okay. So right now, tentatively, I'll send an email after this meeting to the group next Wednesday at 9 o'clock.
Okay, let's go to item number 7, the tentative 2026 water board meeting schedule. We sent out a list of dates. We're trying to stay with the second Wednesday of every month.
That's what this reflects.
Bill Hanley already commented on April 8th that you may not be available,
I might not be available,
Okay.
but
but I'm okay with the schedule.
we don't need to vote to approve that. Let's move down to, doesn't look like we're going to have quorum today. Do we need to discuss the discontinuation policy?
My opinion is that, even if you don't formally approve it, I would suggest we receive some kind of verbal consensus from the board members on that policy so that Veolia can continue operations under those terms. They are, in substance, very similar to what you already approved in September, but with greater clarity on a number of issues. And if we are also going to engage Promise to continue its payment plan management, which they are presently doing, we need to give them clear directions as well. So despite not having the ability to kind of formally vote, if there are any concerns, I would ask the board kind of weigh in at this point. You know, it's very similar to what was approved in September, but we added operational clarity, some definitions. I could explain it if you want, or, I mean, it's in front of you. I know some of you have read it and commented.
Stephen, I reviewed it. Obviously, we've gone through many edits on this thing. I have no issue with them moving forward with it in theory, and then obviously when we
Next
get
week,
before,
hopefully,
yeah, we could approve it next week. Tim and/or Bill, any
No, I-
comments?
I had one concern and Peter addressed it and made the change, so I'm okay.
This is Scott Billman. I think it's clear and concise, and the recent modifications tightened it up where we had some concerns. So I'm good.
Thanks, Scott. So hopefully next Wednesday, we could also vote to approve this.
Thank you.
Okay, thanks. Let's go to item number 9, limit accounts. Doug, is this you?
Yes, it is. Thanks, Bill. Good morning, board. We actually have 3 memorandums for your consideration for funding request increase. The first one, we'll start with spoils. Spoils limit account, we are currently at an approved authorization of 150,000. We are requesting an increase of 60,000. We estimate that that will get us through the first quarter of 2026. At that point, we can reevaluate and see where we are, but we believe 60,000 should get us through the first quarter of next year.
Okay.
Second memo, specialty maintenance. Along the similar lines, current allocation is at 1.143 million and change. We're looking to fund this limit account through the first quarter of next year. The request for the board today is for 775,000. That would bring the total allocation to 1.918 million to get through the first quarter of next year.
Right.
Any questions? No. And then the third memo for your consideration is for high priority main repairs and lead service line replacements. Currently, the allocation is at 4.587 million and change. Veolia is requesting 1.9 million to get us through the first quarter of next year, bringing the total allocation to 6.487 million and change. I do want to note that we are getting into our busy season for emergency main break repair. We have paused the roll program per request of the board. I believe that was in October. But I also want to make sure the board does understand that lead service line replacements do continue through the pilot program. That's the sampling program that is still ongoing, as well as typical utility operations in the event that we're in the field doing a main replacement or any utility work where a service does get hooked, we still have to replace those service lines. So we are still replacing service lines, but not nearly at the rate we were previously. If there are any questions from the board, I would be happy to answer them.
Thanks, Doug. Board, do you have any questions regarding the limit counts? So hopefully at next Wednesday's meeting, we can also approve these.
Okay.
All right, thank you.
Thank you.
All right, let's move down to item number 10, GHD monthly report. Stephen?
Yeah, Stephen Waldvogel, GHD. We've continued to work on a number of items, as is evident, I think, from some of the discussion. One item that we haven't discussed today, but behind the scenes, GHD has been coordinating a significant effort, and that is related to the spoils yard and the anticipated future transfer of property. I don't think we'll discuss that today, but I know Brian Smith is leading that with Dustin, closely coordinating with Peter and Brian Gould, Chairman Gould, as well as Nussbaumer and Clark, who's performing certain survey activities. So a lot of work in that area to move that forward in support of a large grant for that project and, ultimately the completion of Centennial Park. Any comment on construction issues that we should make?
We're Dustin Steiner, GHD. We're beginning work on the last of three motor control center relays for one of the last high service pump, the last 2,500 horsepower pump. Once that's completed, we'll be doing punch list stuff and some other things in the new year. Thank you, Cory.
Anything else, Stephen?
No, that's all for now. Thanks.
All right, Veolia monthly report, David?
Yes, thank you, Chairman David Hill, Veolia Project Manager. Would you like a brief update on the labor? I can do that also. On our labor numbers. Typically, we cover that under public comment, but I can provide a.
Yeah, go ahead.
Okay. I'm delighted to announce that progress has been made towards filling vacant positions. We're now at 104. I think the last time we were on the board was 98.
Congratulations.
No, that's a big deal. I mean, we're working with Nolan Skipper's team every 2 weeks. We're actively trying to fill vacancies. We still have some filter operator roles, counter typists, some water meter mechanics, pumping plant operators, some talkers. We still have some key vacancies, but we are making progress in this direction. Moving on to the Veolia report. A quick summary of our affordability plans. On our residual affordability water program, we now have 2,097 customers. That was a pickup of 35 during the month. From a promise paid perspective payment plan, we have 98 plans currently. We did see a considerable trend down for the month there, 37. On our regular payment plans, we're at 470 and we picked up 10 there. Now the seniors were 43.93. We dropped 20 there. As Doug said, we continue to do some lead service line replacements. There was 5, I believe, recorded on the books this month. Again, for the pilot replacement plans and when we open. From a revenue perspective, for the month of November, we were budgeted 5.3. Our actuals came in at roughly 4.6. For the current year term, we were looking at 25 million. We're roughly at 22.5, 2.5 million off. I'd like to cover some revenue capture initiatives that we have ongoing related to revenue. We've got an ongoing call campaign out there targeting a lot of our delinquent accounts from a commercial perspective. And in the past month, we've netted out over 160,000 through telephone calls. We've also put some messaging, special messaging on the website. alerting customers to pay their bill. We've also put that on the bill itself, making it a priority for customers to pay their bill. As far as discontinuance of service, we have sent second notices to customers, alerting them to the fact that they will be disconnected. In 30 days, they will get a final notice. In January is when the cutoff and shutoffs will begin. In addition to that, there's some other initiatives that we're working on with Mike's team. We're evaluating 777 billing cycles. That's where buildings receive water during construction and then they are turned on. After that, we're making certain process ways that all those accounts have been transitioned properly in the past few years. We're doing an audit on commercial accounts on the consecutive estimates and targeting the meter readers and the meter repair folks to fix those. We have implemented the new rate structure at Exchange Street. All the agents are trained on that. We haven't had much feedback on that, but they know the new rate structures and are able to do that to customers. We're doing an audit of our inactive fire supply accounts to make certain that these accounts are either active or inactive and they're correct in our system. As someone stated earlier, it's imperative that we clean up the information in our system, and a lot of this work, we're going to do that. We're also going to net revenue through this effort. Thank you, Michael. And I do want to mention that a lot of these are ongoing, labor dependent. And I'm going to leave it at that. But we've got some initiatives and we're running with them with the manpower we have. Thank you, Bill. That's it.
Anything else? Okay. All right, so we don't need to come out of session because we were never in it. Next meeting is Wednesday, January 14th. I'm sorry, the next regular meeting, January 14th, but we will have a special meeting next Wednesday at 9 a.m. here. Peter?
Yeah, one question, just a point of order. I have Pete Merlo, Principal Engineer and Secretary to Local Water Board. Charlie, in preparation for next week's meeting, is it the full agenda? Is it reduced agenda? I'm assuming they have to go through the same notification process in terms of the notifications. Are we doing the same format here going through with the documentation? So what is the format? What are your expectations for next Wednesday's meeting?
I recommend, assuming you have a quorum, that it would be an opportune time to approve the various items that were not approved today, so that you don't have to deal with this in January if you're willing to do it.
No, we are moving forward with scheduling that meeting next Wednesday. What I'm asking
Right.
you is formality purposes.
No, I understand.
So-
I'm just saying, what is the scope of the meeting as opposed to just the audited statements? I think the scope, what I'm recommending is do.
No, it would be all these items,
Okay.
but is it the discussion items? Are they needed? Is
No,
the full
discussion
meeting?
items are-
So it's a reduced agenda, but that agenda needs to be posted
Correct.
online. I just want to know what the format of the agenda was going to be in terms of, so we will be issuing minutes today for today's meeting for the discussion items. Do I need to do that, Charlie? I'm just again asking your guidance and formality here.
I think we can defer that because this meeting coming up, this is an informal meeting. So you would end up next week, again, you have a quorum, that's when you do the minutes. Okay.
Gotcha.
So are we going to discuss all of these items again, I guess?
Well, in essence, you don't have to discuss them,
But you can, you know,
So for example, unless we have new information, you don't need to do anything on the rate consultant. I think you would have approval of the minutes. You should offer public comment if somebody wants to comment on that. The draft financials, certainly, if you're ready to approve the meeting schedule.
Does that need it? You want a formal approval on the meeting schedule?
Yeah.
Okay, so that'll be, looks like 3, 4, or I'm sorry, you're gonna keep the public, really 4, 5, 10, and 11 come off the agenda.
10 and 11, yes, that's right.
Are you gonna want the presentation of the financials again, or just more approval by the board?
We went through them. I think we can read them and we can vote on them. Accordingly, to our next vote.
Bill, we're going to state them and then vote on them.
But if you're available, Bill, it might be helpful that you are online. in case
Yeah.
there-
Yeah, maybe just leave it that I can pose questions, but if you want me to redo it again, I will, but I'm not sure if the board members who listen to it want to hear it a second time. I'm just being honest.
Love to hear it again, but, it's just me.
I'm good.
No offense taken.
All right, everybody, thank you. I'm sorry, this is kind of our.
Sorry if I just wanted direction on that, Charlie. Just thank you for the direction on that. It's kind of unusual.
But you do have to send the notice out, Peter.
That's the way it's meeting. The good thing is by moving it a week, it gives me time to make sure we comply with 72 hours. I just have to get up on Friday, so.
But you know, even if you have, for example, if you had to have a meeting